Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for June 1st. Wow, it's strange saying that. June 1st, 2023, just getting on to 6:05 p.m. Central Time. Well, I'll tell you, I'm probably one of the most surprised guys around. Yesterday, we had a 72% probability of a Fed rate hike. Today, you get strong ADP numbers. They were looking for, 180,000 jobs. They get 280. And guess what? The market decides off of that, the Fed's not going to go ahead and raise rates. It doesn't matter what the jobs report's going to say in the morning. We're just at that point. And they went from a 72% probability on the CME Fed Watch page down to an 18.1% as I'm talking to you. Did traders get caught? Certainly. At turning points in a market, if you're a trend type trader, you're going to get nailed here and there. Do you get nailed big? It doesn't have to be big on like a day like today, but you give up your shorts or your longs, whatever you thought was going to happen, because the wave of that buying carried everything. It took the dollar down 74 points. It took all the currencies up rather sharply, every single one of them, basically. It carried the gold market back up, as you can see, the silver market, the copper market. Is it right to be there? We won't know until we see the report tomorrow. My guess is, and this is just a guess, you get a strong jobs report. How does the Fed dodge that? I mean, to me, the only thing you could say is when you saw the ADP number is that the wage gains at 6.5%, by the way, were not as strong as they have been. You can argue that the unemployment claims, any way you want to do it, well, they're not as bad as they were, or they're going up. They're going up. They went up 2,000. Do you think 2,000 is a big jump in them? I don't. I get it, though. You don't fight the market. I'm a chartist. At the end of the day, the chart is right. Everything else doesn't matter. And as you can tell in the marketplace, the charts went back up today. Could everything change off the jobs report? You better count that it could happen if the report comes in super strong. If the report is all neutral and a wobble, I think you've heard from Harker, you've heard from the new nominee for the Fed vice chair, and I think he speaks for Fed Chair Powell. That's typically what you do if you're a nominee for that position, that they'd have to have a big reason to not go into a pause. That's how the market is interpreting it. Let's see what they would do if they get a strong number, because then you've got a problem. And the word is, what will they consider strong, by the way? Let me finish on that train of thought. I've seen under 200,000 jobs, new jobs, and I've seen as much as 235,000 as guesstimates, but most numbers under the 200,000 mark right now. So it's still a historically high number, but it's not like it was during the pandemic. And the thought process on this, and I got to carry it to this, is that, it keeps marching lower. Yes, it's still a lot more jobs and everything's strong, but that'll run out over time. So let's stop raising rates and let that run off. That is the thinking at work in the market. Okay. So in the gold, all you did, if you take a look at a weekly chart of close, is you came down and you went and kissed that 18-week average and you bounced away. You can't tell me that this is a strong bull chart. You've had a move to the downside and you finally got a bounce. You had a big outside week up. Remember what I teach you. My course on outside days teaches you what happens. Is that an indication that the market, instead of a continuation pattern, it's an ending pattern? Well, as it turned out, you've certainly got a bounce off of that. Where did the market carry to? Well, you've got a pattern of a higher high and a lower low, and this high did not take out that high. That's in the 1987 area. Where do you think the resistance is? If you're a regular viewer of mine, how often do I teach you that markets like to play between key moving averages? So let's go first to the first key one, the 100-week average. The market went there, played with it, stayed under it 2 days, and bounced away. I tell you that I think the first resistance point should be the 18-day average of closes at 1985.80. Wouldn't surprise me. As for the Bollinger Band, well, you were hitting it over here. You got back and played with it a little bit here, and you've gotten your bounce since then. In the gold market, what else happened? This is so important. You know, slow stochastics to me are one of the biggest indicators you could run into. And right here on Wednesday, you lost the bearish embedded reading. Do you see that? That was the sign to be out of all shorts, that the odds favor. Strong probability that before you get under this low, you're going up to that. If you haven't taken my enhanced Bollinger Band course, at the very end of this, I'm going to run the ad for that again. Really, it's something to consider. You'll see the probabilities of this. So here's your move now through today. I'm comfortable with what I teach. Market making its run there is, in my opinion. What about the gold silver? Well, silver just got back underneath that 18-day average. Is the correction run its course? Is the question now for everything on this, where if it can stay under that, silver starts picking up on gold. Well, let's go to the enhanced Bollinger Band and come back on here too, because this is so important. Here you are, and this is how the market finished Tuesday. Here's Wednesday. You had not lost the embedded reading. The market didn't make it down here for support. It had spent more time than I thought it should under the 100-day average, which is a sign of weakness, not strength, by the way. If it rallies, where do you think the first resistance should be? Mine will be the 18-day average. If you can clear this high, you break the downtrend. Look what you're doing. And here's tonight. Right on it. So you're at 23.98 and a half, the 18-day average, 23.98.20. Another one of those plays that I teach all the time. Let's go to copper. I'll show you another play in the, here we go, in the enhanced Bollinger Band that I kept telling you can't be short anymore. Here's the market with an embedded reading right here. You lose the reading right there on that day. Unless it re-embeds right away, the odds favor you're going to make a run at the 18-day average of closes. Here's the market Tuesday, Wednesday, bingo, Thursday. Getting the feel for what's going on through there. This is the stuff that I like to teach and help you with, okay? Doesn't mean that all these trades work out all the time. Nothing works all the time. Are they high probability? They are. When you look at the platinum, still an embedded reading. So unlike the other markets, it's not joining in on what it wants to do, nor the palladium. These are still saying to me that unless they lose these embedded readings, that one of these sides of the market is wrong. Is the copper right with that bounce, or was that just a rally back up? Because these are industrial metals. And then we get to the dollar. So what did the dollar do today? Today is the day, by the way. If you step back with me, I can't do it. It's going to not move right. But it was embedded until today's close. It lost the embedded reading. Now the bull trend, this whole bull trend has run its course, on my work at least. And before it goes back up through this high, it should be getting to wherever the 18-day average is, and I'm looking for the two to join. So how do you learn all this? How do you work with it? How do you work with this indicator? Well, I teach you this step by step. My course is 15 video chapters. I give you the charting software that I use with it. You come in, you see that. Each morning for then a couple of weeks, you're going to also get access to my research, my morning subscriber videos, because I want you to see how it plays out on everything, in the futures, the spiders, the stocks. How do you get it? Watch the ad coming up. All you got to do is move your cursor to the top of the screen here, and an icon will appear. Click it. You'll be right into the course area. I'm Ira Epstein. You have a great day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.